Good morning, everybody. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are going to take a quick look this morning at our major markets, identifying some potential breakouts and reversal opportunities. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all that fun jazz. Let's go ahead and dive in right away to our market. So, S&P this morning, we are down 11 points. So down 11 points this morning as we are pulling back just a smidge. One of the things that we want to consider when looking at this S&P is we definitely have a pretty strong move up yesterday. There was a couple of areas here that were potential pullback zones. We did not make it all the way back to those levels. So when I take a look at today, I would say that a breakout above the Globex high doesn't really lead us into any sort of danger. There's not a big supply area up above us for that to be a trap. So I think that if we get above yesterday's high, there's reason to get long above 43 or 46.31. Now that's still about 15 points from where we are today. And so looking at a smaller time frame, maybe going to a 15-minute, where is there an opportunity to jump in and rejoin this big picture trend? I don't have a lot of huge areas. This area down here is good, but not great. And the reason I'm not in love with this area down here is because as I look to the left, you've also got some areas where this has been hit on a couple of occasions. And so that definitely makes it a little bit more weak. It's not as powerful as a zone. So what I'm going to do is I'm going to remove that level at this point and probably look, I don't really have a lot of great areas. Now, I do want to look and see where was yesterday's high volume node when it comes to volume profile. For those of you that use volume profile, we tend to look and see where was the high volume node of the prior day. And we can see right now, the market's actually sitting on the high volume node of the prior day. We've hit off that level and are starting to bounce a bit higher. Now, what does that mean for this morning's trading? Well, a couple things. First of all, if we break through here, then that means that we will have cut through the high volume node, and the better probability is that we continue to drop. Now, the second highest volume node from yesterday is at that level that's not a great demand because it's a retest of a couple of other areas, and we were there pretty regularly. So, I don't know that you have a great room to roam on a downward breakdown, because if we break down below here, I do think you may have a bit of a trap area there at 45.95 that may cause the breakdown to be a little bit less effective. So while I like the break up, I don't like the breakdown quite as much. We may get a little breakdown this morning, so if you're a bit more aggressive, you certainly can take that and look into that as an opportunity. Just taking kind of the breakout either one way or the other this morning. I think the breakout to the upside is the better trade. Moving over, taking a look at the NASDAQ, very similar picture in the NASDAQ. This wick right here makes trading a bit more difficult. This one right there gives us a bit more difficult of a trading stance, and that's because it already came back and retested this area here to the left. And that was a pretty good level and a pretty good retest, but that meant that the demand here has been wiped out, right? The demand in this area has been, if not wiped out, certainly taken to a smaller amount. And so since that level of demand was taken to a smaller amount, I don't know that this is going to be a great demand either. And so you could certainly have a pullback into what is a pretty clean demand area down here at this rally-based rally at 14,822 by 14,851. So that would be the level here worth taking a quick glance at for today. By the way, we're doing today live on YouTube. So if you happen to be one of the people that are watching live and you've got something you want to type in the chat box on YouTube, please feel free to do so. Ask any questions that you have and you want to review today. Now, looking next at the Russell 2000, the Russell did come up into a supply level, and the supply level that we came up into here when I take a look at this, moving over to the left, is a pretty clean area of supply in the context of a bigger picture upward trend. Now, we traded about 50% of the way into the level, but what has happened since we got there? Well, nothing, right? Nothing at all. And so if you're still in this short, take your stop, move it to break even. Definitely not one worth keeping because this is typically a level that's going to fail when it comes back up into it. On the hourly level, this actually has a better demand that's a little higher than the other markets right here at 2087 by 2082. And that's a little bit of a speed candle where we typically anticipate these speed candles to get retraced. And then last, but certainly not least, it's actually been performing really well lately, would be the Dow Jones. The Dow Jones got as high as 35,281 yesterday. Looking at pullbacks, I don't see a lot of great opportunities here on a pullback. I think that your best level is still this one down here. A lot of you may ask about this one right here. I think it's okay, but I think based on volume profile, this 34,612 is the better level. You certainly could also take a breakout above that 35.2 area, especially more for like a swing trade as we are continuing our upward trend. So those are our equity markets for today. I'm going to leave those out. I think that's a pretty good setup for equities. Moving over to energies and metals, starting with crude oil. So crude oil yesterday, we took a look at this little area right here as a 15-minute supply. That little area is the rally base, very strong drop. Remember, this is a speed candle. We typically anticipate speed candles to get retraced. We came close to it without getting in yesterday and then fell away. We came into it about halfway in, but a very small move away. So when I look at something like this, what I now anticipate is that we will break out above these highs, right? This tells me that the better probability is that we break out above those highs because that supply level that existed over here is showing definite weakness. We're basing in front of the level, which essentially is the kiss of death, right? So I anticipate price to break out higher. Getting above these swing highs would change our trend direction because I would have a higher high and a higher low. And all of a sudden, we would be looking a bit higher. Now, on our 4-hour chart, it's not going to really change our trend direction, which is our bigger picture. And on our 4-hour chart, you've got really clean supply right there. Move that to the 1 hour, and that level's not quite as clean, but I think there's definitely a day trade to be made from a breakout here up to this region. Moving over to gold. Now, gold, unfortunately, we came into the level yesterday, hit it 1, 2, 3, 4, 5, 6 candles later. You were right back where you started, telling you, hey, this thing's probably not going to work the way you want it to. And then we poked up above. Now, we got right to the pivot without quite going over it. So technically, if you didn't get out of the 6 candle rule, you didn't get stopped out, but you should probably have just taken off the money off anyway. Not a great setup at this point. Definitely, though, now have 2 clean touches. Touch number 1, touch number 2. Anybody who's been around for a while knows that the third touch with basing in front of the level means for a potential breakout trade to the upside. I think that would actually be a pretty good play, a decent potential. Looking at natural gas certainly starting to come down a little bit harder. You've got a little wick over wick demand area here that we've just bounced off of. So a little bit of basing here could give you a breakdown trade in nat gas. And then copper, we've looked at copper the last couple of days, got a nice little 15-minute area up here that we came close to without getting in. We hit it a second time, but didn't really get a strong move away after 6 candles. And so, no surprise, popped through it. Remember, that's why we care about the 6 candle rule, because it definitely helps us to get out of trades that are not the right setup. Now, in what we've done here just in the last few minutes, I think you actually have a very small setup right here as an opportunity to get short. All right. So those are our energies and metals. Taking a very quick look at our, let's take a look at crypto first. So going to Bitcoin. Bitcoin, we had a gap and go scenario through here as we gapped up, got above the first candle's high, continued to run a bit higher. I will say it looks like it could be rolling over just a little bit. So just keep an eye on this gap area. Now remember, that's in the Bitcoin futures markets. That gap probably wouldn't exist straight in direct Bitcoin, but that's in the futures markets on Sunday evening. So look for a potential gap fill into that region. And then in Ether, looks frankly like we're setting up, anytime it looks like a mountain range near the top, right? I don't know if anybody else sees this as a mountain range, but anytime it looks like a mountain range near the top, be ready for a potential longer term rollover, because that's actually a distribution pattern, right? Where people are slowly selling into the rally. So keep an eye on both of those to potentially come back down, Ether below this level here, because you've got clean air up until this area of demand. Looking at our 10-year note, we looked at this on Sunday night. For those of you that joined our Sunday night live trade room, we did get a pretty nice move away from that level. The second time in, we came through it, so no surprise there. I will say the 15-minute area, I was a bit surprised that we came into it and just blew through it. Now, I say blew through it. We based in front of the level, and what does basing in front of the level mean? It means the kiss of death. And so by basing in front of that level, it definitely added some additional weakness to it. So not overly surprised that we came through that area. I would think that the next thing to pay attention to would be a potential breakdown below here. I'd like to see a bit more basing inside of this, what we're doing right now. And if not, you've got kind of this level on top of a level here. I'm actually going to take just the upper part of that zone as your level. And then we did see a pretty big breakout occur in the euro. So euro gave us a little bit of a confirmation entry on this area here, but once again, basing in front of the level. This is why we talk about basing in front of the level is the kiss of death. And so the KOD strikes again when we talk about basing in front of a level. Price then rallied straight up through that area and giving us no entry, but changing our overall trend direction. Right? Changing our trend direction, telling us, okay, it's all right to be a buyer. So now looking at long on a pullback, I think you're probably okay right through here. Not a great move away. This wouldn't be our strongest move away, but I think you've got a decent little pullback area right here that's worth leaning into. You certainly also have the origin of this move, which is the better of the two levels. I'm going to remove these other two that are down below. Let's see if there's anything really strong on here worth investigating. Not a whole lot. The Australian dollar has moved into a very, very dangerous price pattern. And when I say a dangerous price pattern, what I'm talking about specifically, that we bounced off a couple of areas of demand and supply, are all the wicks. When I see this many wicks outside of candles on an hourly chart, that tells me that there's a lot of risk involved on this setup. And so I'm probably going to want to stay away. When I've got that many wicks just kind of hanging out, those are typically going to be not my best setups, not my best trades. So what I'm going to do on something like that is be more than willing to just walk away. You've got good demand down here at 74,485, and you've got some supply up above you, but the areas in between, I just don't feel like it makes sense to mess around with those levels in between the markets. So those are our futures trades setups for today. S&P, NASDAQ, Russell, and Dow, all giving you potential breakout candidates at this point. I think that's really where I would say is your strongest probability trades would be the breakouts above these these Globex highs. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Thanks for joining us today. I will talk to you soon. See